Welcome to Citi Market Watch, where we concisely unpack all you need to know on important topics. Welcome back, Audrey Cheong, Citigold Private Client Portfolio Counselor. This discussion wouldn't be the same without you.
I am very happy to be back.
There seems to be no end to the negative sentiment from China's zero COVID policy, especially around Asia, rising rates, widening credit spreads, geopolitical tension between the US and China, higher commodity prices, slowing growth, a resurgent US dollar, and the list goes on. All these seem to be continually dragging down Asia's performance. Catching everyone's eye, the Hong Kong Tech Index, which holds many household names, is down 65%. Similarly, Hong Kong's HSI Index and China's CSI 300 are also down 40%, and the broader MSCI Asia ex-Japan Index is down 35%. Audrey, as investors, are we missing anything out?
Well, you did miss out on the US Federal Reserve in your list of perturbations. The US Fed, which arguably was behind the curve, had to dramatically raise interest rates and expectations for higher rates in order to slow inflation.
Indeed, that is a huge factor I didn't mention. So what is the latest in terms of Fed moves and expectations?
Now, the US Federal Reserve in May raised rates for the second time, and it also clearly articulated their planned rate hikes for the next few months to the end of this year and next year. And they also detailed their outlook for ending their bond purchase program, also known as quantitative easing, and shifting to reduce their balance sheet, also known as quantitative tightening.
I know that this all coincides nicely with what appears to be a peak in US inflation, with the latest print at 8.3%, down from 8.5% in the previous month. So Audrey, not that I want to jinx things, but it feels like there is clarity and a changing of tides. What else should we note, especially with respect to Asia?
So what you're really asking is, what are the common paths to prosperity? Well, China's zero COVID policy aside, and that is arguably the key headwind, we see broad drivers across China. China's consumption continues to grow, and there's continued market consolidation, call it urbanization, or a more sophisticated rural consumption. China's millennials stand over 400 million in population, 5 times that of the US. And hence, trends from EVs, cosmetics, e-commerce, bubble tea, health, and wellness are significant. China's technology and their investment in R&D are leading the world. Notably, China continues to file the most patents globally. China is the leading manufacturer for solar panels and wind turbines and has the highest levels of renewable installed capacity and electric vehicles, greening the world.
Thanks, Audrey. Are you seeing any catalysts?
Yes, and most importantly, we see policy alignment and support. We have already seen investment in manufacturing and infrastructure grow year on year, and we see more proactive property support and further PBOC easing. We see more corporate incentives from tax to special bond issuances and an additional big push in infrastructure.
I like your previous point on China's millennials. Interestingly, that same population number across Asia Pacific is over 800 million, as compared to 70 million in the US, which is a significant 12 times. What's the broader Asia ASEAN outlook?
ASEAN markets are on average dominated by financials, real estate, energy, metals, and mining, which means they are less vulnerable to the risk of rising interest rates and stagflation. And these sectors are almost key beneficiaries from inflationary risks. Moreover, as we highlighted in previous episodes, as supply chains diversify, onshore and nearshore, ASEAN economies are likely to be winners in this shift.
In summary, whilst we are not out of the woods yet, we are seeing US inflation peak. The question remains, how fast will this inflation unwind, or how persistent will it stay above long-term averages? In the meantime, markets continue to price in significant downside. I didn't mention it before, but with the MSCI Asia X Japan down 35%, That's the largest drawdown since the 2008 GFC or global financial crisis. That said, we see Asia and China with the most upside opportunities as policy is poised to be stimulative and expansive, unlike the rest of the world. Please do listen to our podcast where we will dive deeper into these details. Also, please do speak to your Citigold or Citigold private client relationship manager about further opportunities.